So give us your word of the day. How do you see today shaping up?
The word of the day is geopolitical risk. With almost 2 weeks to go before a major election, we've got a lot of it, and we're just talking about it domestically, but we've got it internationally as well.
All right. So with that geopolitical risk that you're looking, I know you're also looking at the energy sector and also the election, something a lot of investors like yourself are looking at. I just want to talk to you about energy for a second. Morningstar out with some research recently looking at the performance of the energy sector under the Trump administration and also the Biden administration. As you look at energy and energy investing, is this something that you have to consider? By the way, the orange line is the absolute return under Trump, down about 21%, under Biden up about 167%.
Yeah, I think that you definitely have to look at energy during the election, but I'm looking at mostly the geopolitical risk that you can have with this specific sector, because you've got Israel right now in a war with multiple countries. And if for some reason they're talking about attacking Iran, that could be huge for the energy markets. We still don't know how they're going to attack them, so that's huge on the geopolitical side. And then you've got another huge energy producer in Russia, who is in active war with Ukraine, which we're in a proxy war right now with through Ukraine. So a lot of different things can change the energy sector, and that would affect a lot, specifically inflation in the U.S.
All right. You're also looking at sectors that are doing well no matter who wins the election. One of them is industrials. I want to ask you about this one because this one's kind of interesting. Since the rate cuts up over 5%, but recently we've seen some weakness. A downgraded Caterpillar on too much inventory. China stimulus not really wowing people. China's obviously a big story when it comes to industrials. Are you worried about weakness going forward, even with the rate cuts, due to some of those geopolitics that you were just talking about?
No, I'm not worried too much about the industrials because of a number of reasons. One is because we've got that huge infrastructure deal that we passed a few years back. It still is working throughout the country, and I think you're going to still continue to see a lot of pickup in that sector because of that point. And then another thing is the AI boom. A lot of folks don't think about industrials in that way, but a lot of the data centers fall right in that industrial space, and because of that reason, and you're looking at the likes of NVIDIA, Taiwan Semi, up huge over the last couple of years. Because of that, I think data centers and industrial space are going to do well. So I like that sector no matter who wins.
Got to talk to you about the big stock story of the day, Netflix. What's your view on that company, and also just the valuation story? The stock's trading at about 34 times forward earnings right now. Is 34 times expensive in this market for the kind of growth that Netflix is showing us?
Well, listen, I watch Netflix all the time. So do my family and friends, and that's not stopping. There seem to be one of these streaming services that are doing quite well, given all the competition there is out there from all the traditional platforms as well as the new ones. And so they're a winner. And as long as they continue to create content and folks continue to ratchet up their spending, no matter what they charge for the content, I like it.